Good morning, everyone. Welcome to the Fintech project by Team 9. We are Alice, Andrea, Polina, Omar, Niklas, and Kennedy, and today we will walk you through N26, a German-based startup founded in 2013 in Berlin, which has been disrupting the financial technologies industry during the last years. It now has around 1 million customers and operates mostly in Europe, with projects to expand in the US soon. To start with, we will have a look at the business model canvas for N26. First of all, MasterCard, TransferWise, and Raisin, together with others such as Home24, Tannico, or WeWork, are key partners that enable N26 to expand and grow even more over time. Indeed, the key activities on which N26 focus are, of course, the digitalization of the banking process together with free international cash withdrawals, transaction services, and the customer service, which is carried out online through a chat. Talking about the value proposition, this is focused on providing customers with the best service to handle their finance through a fully digitized bank. To do so, they promise zero to low fees to join and use it, as well as business solutions. Their target segments are young professionals between 18 and 45 years old who owns low to mid-volume assets with modest needs for financial services. Being an online bank, the channels they utilize are mainly social networks, billboards, mobile phone, and laptops, as well as ambassadors within universities and word of mouth. Considering also key resources, these are partnerships, a reliable IT system, a strong network and customer base which is spread across almost 30 countries, and a scalable product. Looking at the cost structure, this is made up by elements such as software and business development, employees, IT, marketing and sales, taxes, and banking license. Lastly, the revenue streams are made up by four main components, being essentially the subscriptions that user may pay to join the service, as well as commissions when making transaction or withdrawals, businesses joining the service, and additional services such as travel insurance, which is why they partner, for example, with Allianz.
N26 has a unique business model that is different to both traditional banks and digital banks like Revolut, Monzo, and others. The main difference from traditional banking system is that N26 is a bank that is designed to be 100% digital, and all operations are realized through an app or a website with an easy, intuitive interface. In order to do so, N26 had to create its own unique package of services that are most commonly used in retail banking and let go of services that require any solid complicated actions from a client or from a bank, like getting a major loan or a mortgage or unsecured lines of credit. The service is provided almost immediately, and customers are benefiting from zero or very low commissions taken by the bank. N26 has introduced a subscription model that provides a steady, constant source of revenue. The main point of differentiation from digital banks, apart from N26 being the pioneer in the industry, is that it has a full banking license, which not only allows it to provide full financial services, but also brings a lot of trust and loyalty from customers. The factors that allowed N26 to provide services in such a way and build the new competitive business model are a lack of physical locations or branches, no branded ATMs, robotic chat support, limited service propositions. All these factors combined have allowed N26 to have a significant decrease in expenses and more competitive pricing model.
Now we're moving to Porter 5 forces. Here we want to analyze the industry if it's going to be more or less profitable over time. First factor is barriers to entry. The first point is low brand loyalty, meaning that for newcomers it will be hard to compete because in financial services, trust would be the key. Regulation from government and licensing could also be the barriers for the new entrants because simply it is not easy to build or make a new fintech company with all of the required criteria. So, we assume that the barriers to entry for this industry is high. Second factor is competitive rivalry. We considered high as well because there are a lot of competitors in this market for example, like Revolut, Monzo, etc. And the switching costs, also the differentiation between companies is not that significant. So customer can change easily to other companies. Third is threat of substitutes. Regardless other aspects, price will be the main trade-off that customers will always consider to switch or move to another company or services. Yet, people also have the tendency to try new things. It's more to behavioral reactions. So over these two reasons, we categorized this factor as high for this industry. The fourth factor is supplier bargaining power. For example, our supplier is MasterCard, and in this industry, the number of suppliers is not many. Most of them are the big players. So, our dependencies to one supplier tend to be high. So, their bargaining power is high in this industry. The last one is buyer bargaining power. The sensitivity of the price is really high on customer, especially in finance field. With the low switching cost, customers will choose the one who will provide their needs more with the various of services. Remember that this industry is really competitive, so the bargaining power of buyer is high in this industry.
Fintech companies offers alternative service to the customer compared to the traditional ones, which are outdated and are being progressively replaced. A lot of people prefer to rely on innovative startup rather than traditional bank system. Talking about the profitability of the sector, at the moment is considered to be medium low, since the business is still new. There are many competitors in the market, but the ones who survive are few. The sector counts many innovative companies that have just been launched, but the majority of them is not making huge profits. On the other hand, the sector of fintech presents an extremely high growth rate. Therefore, the sector has huge potentiality of profitability in the future. As far as concerned, the competitive advantage of fintech startups could be seen as the alternative and innovative services that they offer. The purpose of all these services offered is to valorize the clients, offering an even more personalized service and to improve the overall customer experience, improving at the same time the trust of the customer. The profitability will be higher at the end of the life cycle of the sector because the business will be more popular and trusted. It is similar to many other products considering the profitability flow, even if nowadays the life cycle of the service are becoming shorter. There are generally four stages in the life cycle of the digital bank, starting from the incubation, going to the fast growth stage, and after this it begins the cleaning up phase that consists in achieving profitability and losing irrelevant customers. In this phase, the company's profitability will start to increase. The last phase is stagnation.
Coming to section 3 and with that to the VC kind of point of view, we first look at number 26 strengths, which are the cost structure. They really were able to reduce costs on the one hand on the customer service side, and on the other hand on the reducing costs on the operational side through not having any physical stores. Further on, the business model shows great potential to scale and to expand to other countries. Plus, the business model also allows it to add additional services, which makes it great potential to even further grow. And as one of Europe's unicorns, number 26 already showed great traction and proved their business model, which is definitely a plus point. Having a look at number 26 weaknesses, like I already said, the cost reduction in customer service has a positive side, but also a negative side, since customers complained not reaching employees at number 26, and since reaching customer service is only possible through chat. Furthermore, there were problems with cybersecurity, and money got stolen and accounts got hacked, which is definitely something which needs to be fixed. And customer relationship in general is really hard to build up and to build trust and loyalty through an online-only experience. Having a look at the market shows great potential and is still further growing. And changing market conditions also lead to new opportunities, since regulations get changed and get set up by governments. This could be also new opportunities for us to further grow. On the other side, there are also great exit possibilities with an IPO or even acquisition by major players, one of the major banks, or even someone like Amazon or Google. Coming to threats of the market, there is really high competition, and especially in Europe, there are currently number 26, Revolut, and Monzo fighting for market share, and the competition is even bigger in the US. Possibilities could be to expand the business model to Africa, where no online bank is really currently focusing on. And on the same time, regulations vary from country to country, which makes it harder to expand more quickly and to grow quickly. Nevertheless, based on these facts, we would consider, or we would recommend investment into number 26, since it has a unique cost structure, showed already great traction, is in a growing market, and shows great exit possibilities.
So moving on to the segments to be improved. First, customer service. According to a report, the customer only wanted to look briefly at his account at the online bank N26, which was suddenly blocked, and he immediately tried to reach someone at N26, but without success. The telephone service was stopped, automatic mails put him off, and it wasn't until 2 full weeks later that he was able to reach someone in online chat, explaining his problem, and asked how high his account balance was. You can no longer reach the bank by telephone. The service chat is not open around the clock, and the customer can ask for a callback in urgent cases, but that doesn't always work either. So moving on to the building trust, as N26 exclusively relies on an online appearance, the company has less personal contact with the end customer. This problem is exacerbated by the fact that no telephone customer service is required. Although this waiver has advantages for cost structure, it makes the process of building trust more difficult. Customers have not yet come to accept the complete renunciation of personal contact when it comes to banking. Another point that we want to highlight is the technology. Technology is still vulnerable, and due to hacked accounts and fraudulent transfer and blocked money. So one of the cases that we had was this customer that his most recent account balance was short of 80,000 euro. The money was gone, apparently stolen. It wasn't until weeks later that N26 refunded the money. The last but not least, diversification. It would be a good point for the company having hotels or outlets as partner that could increase their revenue stream and customer loyalty.